Nearly every business owner that I talk to is laser focused on one thing: making more money for their business. It's their baby, it's everything that they've ever known. But when they do that, they're often totally neglecting what their actual financial future looks like. Now, think about that conundrum. They want to make more money, but they're not actually thinking about how this translates to their personal life. In today's video, I'm going to show you, as a business owner, how you can plan for your business today to make sure that you have optionality in the future and you're not stuck like most business owners are. Hey everyone, if we haven't met before, my name is Jacob Turner. I'm a former Major League Baseball player and I currently help athletes and entrepreneurs build and protect wealth. And in today's video, we're going to go through an exact case study of something that we see time and time again. A young business owner coming in saying, my business is doing better than it's ever done, but I'm not really sure if this is something that I want to do for the next 20 or 30 years, and I really want to create optionality. So we're going to walk through what the numbers look like when they come in, what the strategies and the foundational elements that we recommend are to make sure that they have the flexibility to sell their business, to reinvest in their business, to grow their business, or to scale back in their business. Or said another way, I want them to have the flexibility to do whatever they want in the future. So before we dive into the software and specific numbers and talk about foundational elements and tweaks we can make to give them financial optionality in this situation, I want to set the stage for what we're going to be looking at. And all the numbers have been changed, all the names have been changed, but what we're going to talk about today looks a lot like a lot of the clients that we help. They're young, they have a business, it's earning significantly more than they ever thought, and they're thinking, what should I be doing with this money? How do I create financial optionality? Because that sounds nice in theory, but I don't know where to go. So here's the stage. We have Bob and Jill. They own a business together. It's in the e-commerce space. They're making really good money. They're both 36 years old. And they're saying, I don't know where I want to be in the future. And I don't know if I want to grow this business forever, but right now it's great. So what we say is we try to set 1, 3, and 10-year goals. And in today's video, we're going to talk specifically about what those 10-year goals are. And I'm going to backtrack to show you how we can get there to ultimately give them the financial optionality that they want. So let's dive into the numbers. Okay, to start, we need to understand the lay of the land here. Bob and Jill, both 36 years old. And the first thing that we always look at is, what does the total net worth picture look like? And this is what a lot of business owners that come to us, it looks like. Significant amount of money in cash, $250,000. And that isn't because they don't want to invest it, but because there's no direction around the money. We have a little bit of money invested, $175,000. You can see all this is in 401ks. Again, no real direction around this. They just thought this was a good idea to reduce their tax bill. They have a nice house of $1.5 million. And you might notice that their total net worth is $6.9 million. So where's the other money? And this is one of the big things I want you to understand as a business owner. You need to understand that your most valuable asset is probably your business. So I'm not saying you got to go get a valuation done and figure out exactly what it is, but for all the clients we work with, we like to understand, what is the general ballpark valuation of our business? For Bob and Jill, we're saying that their business is worth $5 million. Now, if your business is worth $1 million or $5 million or $10 million, you just need to understand ballpark where it's at. It's probably your biggest asset. So we need to understand, if we do nothing and we want to create this level of financial optionality in 10 years, what does that look like? And the reality of that, in order to do that, they're going to have to sell their business for the perfect number. And what I want to show you is, what are the goals that we're trying to accomplish? Okay, in 10 years, we have retirement age at 45. Now, when I say retirement, when I say that for a business owner, what I mean is financial optionality, okay? Monthly retirement expense of $30,000 a month. This is inflation adjusted. And then they want to buy a vacation home for another $1 million. Total income, they're earning about $1 million from the business today, $400,000 of that in terms of salary, another $600,000 in company distributions. In terms of savings, the only savings they have today are going into their 401ks. They're maxing this out on a yearly basis. And their current expenses are right in line with where they want to be in 10 years, $30,000 monthly expense. So if we take a look at their situation today, if we make no tweaks, where are we at? We're at an 18% probability of success. And this right here is the problem that I see a lot of business owners have. They have a $5 million business. We have it growing at 10% a year, and they're selling it in the future for about 11 million bucks in 10 years, and they're still not in a position of financial optionality. And you might be saying, like, how is that possible? Well, I want to show you a couple things that we could do to further optimize this situation. But before I do that, I want to understand the framework that we think about this. Our 10-year goal for any of the clients we work with, but especially our younger business owners, this is our aspirational goal. And the only way we're going to get to our aspirational goal is to backtrack and say, what can we do on a 1-year basis that's fully in our control to get closer to that 10-year goal in the future. So again, total net worth, nothing's changing here. Goals, nothing's changing with our goals. Income, nothing's changing with our income. But what we are going to do is we're going to say, okay, how can we further optimize our savings? And one thing that we like to do for a lot of business owners is do backdoor Roth IRAs. So we're going to recommend maxing out backdoor Roth IRAs for both Bob and for Jill. And the reason for that being is what this is going to allow us to do is get another $14,000 into retirement accounts. Now, they are above the threshold to be able to contribute directly to Roth IRA, so we always recommend a backdoor Roth IRA strategy. But in terms of other savings, we are also going to recommend a pretty significant amount going into the taxable brokerage account. So let's say we have $200,000 going into their joint taxable brokerage account. It's going to end at the retirement or the sale of the business. And I think this is important to understand because this is a stepping stone to get us to financial optionality. So that's one tweak we're going to make. So if we take a look at that and we say, okay, if we add these savings in here, what does that get us from a retirement standpoint? And you can see it gets us closer to our goal. We have a 44% probability of success. And what this means is if we're in an airplane and we're taking off, 44% of the time, we can be in flight and we can make no adjustments. Now, I like to see this number quite a bit higher. I like to see this number above 70%. So what are some other tweaks that we can make? Well, we already talked a little bit about what they're saving, but what I see with a lot of business owners is they don't spend a lot of time thinking about what their total allocation should be. So if we took their allocation, we made it a little bit more aggressive, what would that look like in terms of what they're spending and their financial optionality could look like in the future? And you can see here, our probability of success goes up by about 5%. So we're getting closer. But what is the big factor, the big lever that we could pull to make this thing all change? And I want to show you something down here. The retirement spending that we have is what's called inflation adjusted. This is how most financial planners think about retirement spending. I hate this. And here's the reason why. Nobody, including any software, the smartest people in the room, know what your spending is going to actually look like in 30 years. Instead, what I want to do is set levels or guardrails in place to say, okay, this is what we're spending today. If the market does really well, we can spend a little bit more. If the market does really poorly, there's variable expenses, vacations, eating out that we could potentially dial down a little bit. So if we change this from inflation adjusted to guardrails, and we say, okay, what does that do for our probability of success in the future? You can see all of a sudden now we're at 79%. And I show you this for one reason. We didn't make any drastic changes for Bob and Jill. We gave direction to their money. We changed what their asset allocation was, made it a little bit more aggressive, and we gave them a clear approach to spending in the future. And this is what I see with a lot of the business owners we work with. All the puzzle pieces are there, but it's our job to help educate them around how we can put these puzzle pieces together to make the most of it. To me, there's 3 clear takeaways from this video. Takeaway number 1 is that most business owners just don't plan for their personal lives. And frankly, I get it. You're so focused on building your business. It takes up every single thought every single day for you. But the reality is you need to start planning for how your business is going to connect to your personal financial life. Number 2, when I talk to a lot of business owners, they think they have to make some drastic change. They have to save millions of dollars in a year to make sure that they can get set up for their financial future. And the reality is what they often miss is it just takes little steps over time to get them to a position where they have some level of financial optionality. And the third key takeaway for me is this. Financial optionality is different for everybody. A lot of business owners come to us and they think that they have to be able to sell for the perfect number, or they have to get a certain number of their bank account before they can potentially take their business to market. And the reality is every plan has moving pieces. And what you saw with this plan today is, yes, there are foundational elements. We want to make sure we have a plan in place. We want to make sure that we're saving consistently. We want to make sure that we're creating optionality. But that optionality might look a little bit different than the plan that we showed you today. Because the reality is your money is specific to you. Your business is specific to you. Your goals with your business are going to change over time. And that is why it is so important to make sure that you are doing the little steps today to create future flexibility and future financial optionality for both you and your business. As always, my goal is to help you get smarter with your money. So if you're into that sort of thing, make sure you subscribe so you don't miss any future videos. And I'm always looking for feedback. So if you have other ideas that you want me to do, other things you want me to tackle, put it in the comment section below and I'll make sure I do it on a future video.